Equitas Small Finance Bank that have come out with their numbers. We're now joined by PN Vasudevan, who is the MD and CEO of Equitas Small Finance Bank. Very good afternoon to you, sir. Thank you so much for joining us on ET Now. And let me actually straight get to the earnings. And if you see your credit cost for 9-month period now is approximately about 10% in the MFI segment for you, which is actually usually about 3% or so. What's the way ahead, and do you think that this is the peak of the cycle?
Yeah, so let's start with microfinance. First of all, microfinance contributes about 14% of our total advances. Yes, typically in a normal time, microfinance does have a credit cost in the range of around 3%. But presently in the third quarter, we had a credit cost running into about 10%. Largely because of the slippages that we saw in the previous quarters. Typically in microfinance, what happens is when you have an X bucket slippage in a particular quarter, it takes 3 months for those accounts to eventually become an NPA, which is not collected. And then once they become NPA, it takes another 2 to 3 months before they get 100% provided for. So what happens is, any credit cost you see in the third quarter is really a reflection of what happened in the first or the second quarter. So what we had mentioned in the con call to the investors also was that we should see some elevated credit cost running in the fourth quarter as well as in the first quarter of next financial year. Basically, which is a reflection of the lower X bucket collection efficiency that we saw in the Q2 and Q3 of this year. Now the question is, what will happen going forward? When do we expect to see this coming back to some reasonable normal levels? We have to wait and see. The Q4, this current quarter's collection efficiency is something that we are working very hard on. And of course, the bank has taken a lot of initiatives, as well as there's an industry level initiative which has been taken in terms of MFIN Guardrail 2.0. So all in all, we expect that the situation should improve. The over-leverage number of customers, over-leverage should come down. And hopefully the collection efficiency should normalize between Q4 and Q1. If that happens, then we can probably see the credit cost easing off in the second half of next financial year.
Right. If you look at your NIMs, they've been in a downward trajectory. We understand that as bank goes away from MFI, our NIMs will actually get impacted. But going ahead, if you could give us a sense of an outlook that you are penciling in for that number.
Yes, so the NIM has been going down largely because of the percentage of microfinance contribution to the total advances. That's been coming down. And that has an effect of the NIM dropping. Since we expect our microfinance to continue to reduce as a percentage of overall advances over the next few quarters also, so to that extent, yes, the NIM should continue to keep coming down. Only thing is that the effect or the extent of effect of NIM because of the microfinance drop will come down. Because already microfinance is down to 14%. It was about 19% when we started the year. It's already down to 14%. And then going forward, as it keeps coming down, well, it will have an effect on him, but the level of effect should keep coming down over a period of time. And we are also trying to, focus on certain other products such as our MLAP, that's micro loan against property, which is a small ticket loans for small businesses secured against their house property. That typically tends to have a yield very similar to that of microfinance. So we had been focusing on that during this year. And this year, for the first 9 months, the disbursement on MLAP has actually doubled over the previous year. And so a combination of this product, kind of taking off further, as well as the microfinance contribution coming down. While the NIM should come down, we expected the effect to, kind of mitigate over the next few quarters.
Right. If you could put some light or shed some light on the asset quality in your non-MFI book, because your slippages have declined by over 100 basis points or so with the new disbursements, do you think that there's more scope of improvement on that particular front?
Yes, so the slippage, the net slippage in the rest of the book, other than microfinance, really showed a sharp uptick. A sharp improvement, and it's come down by more than 100 basis points. I think that trend should continue because typically, as I mentioned, fourth quarter is very good for the banking industry as a whole, and we are likely to be no exception to that. So we should see the net slippage in the non-microfinance book continue to be very much under control. The overall credit cost for the entire 86% of the book, which is the non-microfinance, is about 1.1%, and that's pretty comfortable. So we are very comfortable in that. If only the microfinance comes back to some level of normalcy, I guess at the bank level, we should come very close to our normal levels of performance.
Right. You've also been growing your book pretty well above that 20% levels or so. Although there's been a blip in the profitability due to the increased stress for the last few quarters, any aspirations that you have in your mind when you talk about your growth or, for the matter of fact, the ROAs?
Yeah. So if you see, our deposit has been growing quite well. It's been growing around 25% even this year. CASA has come down a little bit, but largely replaced by retail TD. And our cost of funds has remained kind of steady at 7.5%. We did go for a reduction in our term deposit rate, peak rate by 25 basis points in the third quarter. And we did change the slabs in our savings account over the year twice over the year, which has led to about 13 bips reduction in the cost of funds on savings. So we are trying our best to see how do we improve the cost of funds so that that helps in terms of some NIM and contribution to the bottom line. And in terms of the overall growth, yeah, I guess our non-microfinance should continue to do well. We don't have much of an issue on that side. And microfinance 11% degrowth in the first 9 months may continue to be degrowing over the rest of the year also. But overall, put together at the bank level, we are really not wanting to guide the overall growth in the advances at this point in time. But we'll have to just wait and watch for the fourth quarter before we are able to guide on that side. In terms of the profitability of the bank, our PPOP, that's that profit before provisions, has come down largely because of the income from microfinance coming down. But we expect that to stabilize as the NIM also stabilizes. We expect the PPOP to stabilize, and profitability should come to a more healthier level, I think, from the second half when the microfinance stress more or less plays itself out.
Right then, Mr. Vasudevan, we leave it there. Thank you so much for joining us on ET Now to talk about the quarter gone by and explaining to us how the numbers actually were made up, or rather how the numbers actually were in the quarter gone by. But thank you so much once again for joining us on the show.